one thing that was always gonna, the big thing to look out for was really on the earnings call around forward expense guidance and CapEx, and the CFO, towards the end started talking about the outlook, and they, on the CapEx side, they said that they expect CapEx to be modestly higher in 2023 than in 22. And I think, the Google bulls were probably hoping for management to pull more of a Zuck and be really aggressive on cost cutting and the CapEx side this year. So, it's not, so like for Meta, it's the year of efficiency. For Google, it's more of, the year of discipline. And that's mostly a function because they have to continue to make incremental investments in AI to maintain their competitive advantage, to preserve their search share, even though it is going to be coming at the cost of their margins on a consolidated basis. They also announced a $70 billion share repurchase authorization. And so they continue to take all their free cash flow and continue to buy back stock, which, is shrinking the float by about 4% a year. So that definitely helps a little bit. So, look, the net of it is, no change to my view on the stock here right now. I'm just going to be patient with it, see how the data tracks, give it a couple days, and then, reassess. But that's my take.
Yeah, that it's interesting, right? Like if I just to get people to think differently, because we are different, and the summary of the call should be different because everything that we're doing is a collective effort. But I mean, you're let's just, like Visa, you just take 2% out of what everybody spends. And think about that from a GDP perspective, that's monster. If you just take 2% of human beings that now use ChatGPT instead of Google to look up, like I do, I can't even remember the last time I used Google search. I mean, let's say there's 2%, 1%, 0.2%. These are like big changes that, one in Visa's case is a macro change, and in Google or search's case, I guess you'd call it, right, like a secular change with a lot of competition. It's the analog is like Tesla with an EV in the beginning, and a cool EV at that, and now everyone having EVs. So what do you think about that quickly?
Yeah, look, I mean, I think that it's a real risk that you need to consider longer term. I think that it's forcing Google into investment cycle first, so it's showing up in the expense line, like I just mentioned. But as far as it having a meaningful negative share impact in terms of their top line, it's probably we're probably maybe like a year or two off from that having a really meaningful negative impact on revenue trends for their search business. So it's going to hurt their expenses first because they have to invest ahead of that. And then it's going to take Bing, if they're successful with AI and ChatGPT, and also to just drive higher adoption, right, of these chat type AI services, engagement to ramp up for it to necessarily have a massive impact on revenue, which would happen on a lag, right? So that's my initial thinking. So it's definitely a risk, but it's not front and center on the revenue side at this very moment.
I mean, it makes your head spin. Mine spin. Never mind, like somebody who's trying to spin their latest bullish narratives, because you go from like, oh shit, phase one of the bear market, these stocks can go down, to, oh, I got to buy them on cost cutting, to, oh, I love AI, but you got to spend against that cost cutting now to grow. And it's like, fuck, none of them are talking about being in a recession, by the way, not one of these companies, Visa, Google, Microsoft, et cetera. So, spin, I guess, is going to be my macro theme of the day.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.